hanging by a thread. With interest rates rising, businesses and households are under ever greater pressure, ever more likely to dip into the red. Like many, this textiles company took on extra debt during COVID, debt that's now getting much more expensive.
The current level of demand within manufacturing is softening, and because of the interest rate changes, financing within a business is becoming increasingly more expensive, thousands of pounds a month, and that is a direct cash flow hit on the bottom line, and it's something that we aren't getting much sympathy for from government.
Or from the Bank of England. Not only has it raised rates, it's signalled that they may have to stay higher for longer.
We've got to get inflation back down to target. Now, I think it will come down quite substantially by the end of the year. It won't be back to target. We've got more to do next year and we will do it. But it is on the way down there.
If they're right that interest rates are going to be higher for longer, then that has all sorts of other implications. It means borrowing is lower, investments lower, the economy, well, they may not be forecasting a recession, but when you look at the projections, they are talking about not just a few months, but a few years of flatlining. That is pretty bleak. Let me give you a sense of what that means. This line is the size of the UK economy, total national income. Before the 2008 crisis, it was rising quite fast. Then it took a dive, but seemed to be recovering until COVID. But here's where that bleakness comes in, because today's forecast from the bank means we're now on a completely different trajectory. There's so many exciting things. The Chancellor insists he's doing what he can.
We should recognise that there is a lot of pain for families, for businesses. The process of getting there is very tough. And so what we have to do is to stick to the plan to get there as quickly as possible, because once we get inflation down, you can start to see a path where interest rates will come down, and that will relieve the pressure on families with mortgages, and that's what obviously we want to happen as soon as possible.
For those who've paid off their mortgages, higher rates might be good news, higher returns on their savings. But for those with mortgages, especially those like Joe on a floating rate deal, it's a recipe for disaster.
It's really stressful because I'm thinking, what's left? Where else can I go with this? What else can I do? Sleepless nights, having to think about cutting everything out basically just to survive and keep the house. And I thought having one full-time job that I've worked all my life full-time, that would be enough. But in this day and age, it's not enough.
This period of difficulty won't last forever. But, says the bank, it might last that bit longer than many had expected. Ed Conway, Sky News.